Hey guys, welcome back to my channel. Jeremy Parvin here. Today I'm going to be talking about how you can get started with your first rental property. As you know, I've built a passive income stream of over $50,000 a month in monthly rents. My current portfolio is worth over $6.5 million. I've done all this while working a full-time job, and I'm going to show you how to do it also on my channel. I also do one-on-one coaching calls, and I'm working on some online courses. I recently did a video on why 2021 may be the best year in your lifetime to invest in real estate. If you haven't seen that video yet, I highly recommend you go back and listen to that. 90% of the world's millionaires made their money in real estate. Bill Gates was recently announced as being the largest owner of farmland in America. And Jeff Bezos of Amazon owns twice as much real estate as Bill Gates does. These guys are buying up real assets right now. I'm trying to do the same thing, and so can you. It's never too late to get started, and now is the best time. I recommend buying as much real estate as you can, as quickly as you can, as long as it can cash flow. So in this video, I'm going to show you how you can get started investing in real estate right away. For those of you who know Lily, she recently fell off the bed while trying to get down the stairs a couple of nights ago, and one of her front legs is not feeling well. But she did want to say thank you for supporting our channel, and she is going to be giving away one pair of Apple AirPod Pros to one of our first 1,000 subscribers as you guys help us to reach that. Be sure to hit the notification bell so you'll know when another video comes out, and we would appreciate any likes and sharing this with any of your friends to help us grow the channel. Thank you. So let's get into it. So how to get started with your first rental property? Well, first of all, if you own your own home currently, that is the best property to become your first rental property. Most likely. As long as it's not worth more than about twice as much as the median or average house in your area. And the key to this is if you buy a home that you're going to live in, you'll get the best financing, significantly better than if you were buying it as an investment. So you'll be able to get the best rates, the lowest down payment, and the longest term. All that just helps you with your monthly cash flow on your rental property. And all that means is the amount of money you bring in for rent minus the amount of your monthly expenses is what we call cash flow. Listen to that. If you can hear Lily, she's whining for me to open the door to let her out. Now she has a dog door, but sometimes she likes me to open the door for her. She's playing me with this hurt foot. And so for example, if you were to get an investment loan on a property, instead of getting a 30-year term, it'd be a 20-year most likely. And instead of getting a 3% interest, it'd probably be a point or two higher, so call it 5% interest. And then instead of paying only 3 or maybe 5% down, you're looking at 20% down. And that's why your first rental property is generally the home you're living in now, or your first home that you buy. So when people ask me this and I tell them that, the first thing they say is, there's no way I could get another home loan. I'm maxed out with the bank. You know, we bought a house and that's all we could buy. How in the world could we possibly get another loan? So first of all, you can. And the way it works is when you rent your current house out, that rent now becomes income. Now the bank will deduct about 25% of that to assume for vacancies and expenses, but still you can certainly qualify for another loan to buy a second house. So let me say this too. Banks love W-2 income. So if you're currently employed somewhere, that job can actually help you to become a real estate investor. This is exactly how I did it. Tim Ferriss said it best in his book, The 4-Hour Work Week. Use your day job to help you build something on your own in your spare time. And then eventually you can leave that day job and just work for yourself if you want to. In the show notes below this video, I've got a link to some of my favorite books, including Tim Ferriss's 4-Hour Work Week. Also on the link with my favorite books is a book by Gary Keller of Keller Williams called The First Time Millionaire. And I recommend this book to all the newbies that I meet. It's a great one-stop shopping book for really everything you know to get started. Credit score. In order to get great loans, you're going to need a good credit score. And if you don't have one, you can fix it. What I do personally is monitor my credit, and I've done this for years. I buy one of these credit monitoring services, and I pay for it, by the way. I currently use Identity Guard, and I'm working on getting a promo code for you guys to save some money. So if you haven't subscribed to that, hang out a little bit, and I should have one of those for you shortly. But I pay for that, and I pay a little more to get the credit monitoring for all 3 of the credit monitoring agencies. Some smaller creditors will only report to 1 of the 3, and you need to look at all 3 of them. And as a lot of you know, a 640 credit score is just right where you are at or below subprime lending or bad loans. And then a good score is somewhere between 700 and 740 to get the best rates. My banker, I asked her the other day for this video, what score do you have to get the best rates? And she surprisingly said 700. You usually hear 720 or 740, so that was very good news. And so these credit monitoring services, they'll send you an email when something hits your credit score. They'll send you an email once a quarter when your credit score changes, but also you can go into them and see all the different things that make up your credit score, the negative things, the collection things, and those are things that you can see exactly who, what the address is, and the contact info, and you can contact these places. And the key to all this is getting these things removed from your credit file. And so there are a lot of mistakes or medical bills, little things like that will show up, or some kind of subscription to some kind of movies or something that showed up on mine from a house I used to live in another state. And you contact them, you get these things removed, and it takes a little while. You got to keep up with it, but you can certainly get your credit score up there. And it means everything to the amount of payment that you're going to have on your houses and cars and everything for that matter. So it's certainly worth your time to spend some time and money monitoring, maintaining, and improving your credit score. So talk to your lender and be upfront. Let them know you're thinking about renting your house out and what would you need in order to qualify to buy another house and the timing of that and so on. Let them know that it's okay to run your credit score, because the second you tell them that no, you don't want them to, they get that you're not very serious. They put you at the bottom of their stack and they work with more serious clients. One hit to your credit score is no big deal, and you're going to need that anyway to get pre-approved. So I would say do that and get started today. They can tell you what you might be qualified for now and what you need to do to get qualified for more. So once you do get approved for another house to live in, then I would certainly ask for a pre-approval letter by your banker. And it's kind of preliminary, but it's something, so you can show this to a seller when you submit an offer, for example, and to a realtor, and they'll know you're serious also. It will make you be a more valuable buyer. And so if this buyer gets 2 offers, like in today's competitive market, and you've got a pre-approval letter and they don't, you're going to be a stronger buyer and they're going to choose you over the other buyer, for example. Some other recommendations that I'm going to tell people are I recommend that you do get a 30-year fixed mortgage. Some people say, no, I don't want to, how long am I going to live, or I don't want to be paying that thing off when I'm old. And I say do a 30-year fixed mortgage for 2 reasons. The first reason why I suggest using a 30-year mortgage is because it'll increase your cash flow. Your payment will be smaller and you'll have more money left over at the end of every month. This is going to help you for vacancies or maintenance expenses, or if hard times come, you can survive and weather the storm. You're going to sleep better. Another reason is it lowers your debt to income ratio. And so this is what the bank looks at when they're deciding whether or not to loan you some money or how much money you can borrow for your next purchase or your next purchases. And so if you continue to get 30-year loans as you buy 1, 2, 3, 4, and so on, it's going to help you down the road. If you get 15-year mortgages on all these, you're going to run out of road and not be able to buy more. Another suggestion I have is to ask your lender if the seller can pay for some of your closing costs. They might have a percentage, and it will just lower the amount of cash you have to take out of pocket to bring to closing. And you can keep that cash as a down payment to use on another house, or maybe on some of the improvements after you buy this house. Or ask the bank if you can finance in your closing costs into your loan, anything to save your cash. Make sure your loan doesn't contain any prepayment penalties if you were to pay the loan off early or refinance the loan. I'd also suggest not buying points. That's just paying more money and more closing costs to get a lower interest rate. It takes several years for you to pay that back or to break even. And a lot of times you'll refinance on a loan anyway with today's crazy low mortgage rates. So I wouldn't do that. There could be some tax advantages to doing that if that's your strategy. But as a beginner, I would simply say stay away from that. Just minimize the amount of closing costs and cash at closing so you can buy more properties right now. Another major banking recommendation is before you move out of your house, or if you go buy a house to live in and then turn into a rental property, while you are still living there, get a home equity line of credit or possibly a cash out refi, which means you refinance and pull some money out. I prefer a HELOC because you don't pay any interest on it until you take it out. Having said that, I just completed a cash out refi last week. These are great loans you can only do while you're living in the house. The closing costs are usually little to none. Oftentimes you can finance them into the property. You can usually choose a couple of different variables on these loans. I suggest choosing the one that lets you borrow the most loan to value. It'll have a higher interest rate, but don't worry about that. You generally only pay interest only on these loans, and what you're going to use this for is for buying your next properties, or buying the fix up or repair something on the next properties. I've done this and it helped me to buy 3 more properties for my down payment amount, and you can do the same thing. Now, if you're getting close to buying your second home and you need some money to put down at closing, what I suggest doing is pulling out enough money out of this home equity line and then putting it in your savings account. A lot of times banks will require you to show where you got this money from, and so by having it over, and they'll ask you for statements for say 60 or 90 days. So a good 3 or 4 months before you close on this house, if you're preparing for this, pull some money out, throw it in your savings. Your payment will be so low, you'll be surprised how small it is. Or pull out enough to cover that payment if you need that. And then after you close on that property, if you need some more money to fix up, you can borrow that down the road. There's no sense in paying extra interest on that at this time. And then if you're needing to know what a good interest rate is and how that compares to the market, so you can tell your bank they're doing a good job or a bad job, for example, or know how much more to ask for, bankrate.com is the site that I go to look to see what current rates are. So other sources of cash that you can use for down payments. If you have a 401k plan, I've borrowed money against it before to use for buying things. You generally have to pay interest, but you're paying yourself interest. Also, friends and family are a great source of potential loans. Credit cards, sell some toys, some boats or cars or ATVs or something like that. Or take out a loan on a car if it's paid in full. So if you don't currently own a home, then you can buy your first home with the idea of turning it into a rental property. So now let's talk about what kind of houses would be good for becoming rental properties if you buy your next home or your first home with that intention. So most investors, when they buy their first homes, and I made this mistake, they start with very inexpensive properties. And we all make that mistake, and then we learn from it and we don't do that again. Some of us, it takes more times than others, and yes, I have 3 of those. The smaller houses do provide better cash flow, but they tend to provide a lot more of the problems. You know, you control much less wealth with many more times the problems. And so for that reason, I recommend maybe considering duplexes, triplexes, or quadplexes, or fourplexes. And the reason I say that is because those properties would allow you to still take advantage of these owner-occupied loans that have the best interest rates, the longest terms, and the lowest down payments. So I think that's a decent way to get started. I like single family homes, and I like to buy them around the median or average price houses in your market down to about maybe 80 or 75% of the average price houses in your range, kind of just below, at or below the average price houses in your area. I like a 3 or 4 bedroom, 2.5 bath. I like 1,000 to 1,500 square feet. Maybe something with an extra bonus room if it's a 3 bedroom or an office or study area. I don't like houses on a busy street. I don't like houses with steep driveways. I do like a fenced-in backyard. I like one-level ranchers. I like to buy in desirable school zones. That's almost a must for me. I like the area to be safe enough where you would let your mother walk around at night. More square footage doesn't equal more rent. It simply costs more to buy and more to maintain. I like to look for properties that just need some cosmetic things like paint and carpet, because you can generally get these properties because other people don't want them. They want something that's move-in ready, and you can add some value on the front end. This method is known in the business as BRRRR: buy, renovate, rent, refinance, and repeat. I recommend focusing on 5 to 10 subdivisions. Look for the ugliest houses in the subdivision, the ones with the grass grown up, they look unmaintained. Look for signs coming up for sale by owners, for example. You can also look up the address on the county website and mail letters to these owners. It's nice to find somebody that's an out-of-town owner and just send them a letter once every quarter. I did this on a subdivision that I now own 3 houses in, and that's how I bought my last house in there. Let them know that you're willing to buy it as is with no realtor fees. A lot of times people think that it's in too bad of a condition to sell it to anyone, and then they know they're going to pay a realtor, and you're just going to make it easy for them. So median price houses is the largest segment of the market. There are more buyers and more sellers there. They also tend to appreciate more than low-end houses, assuming you buy in good areas. The occupants are generally better as well, and they're a lot less trouble. You get to control more wealth with fewer tenants. As a beginner, I do recommend hiring an inspector. I just hired an inspector to inspect my 36th property that I have under contract. After the inspector finishes, they'll generally send you a report that has lots of little things. I like to call them back and say, hey, what are some big major things? And then they'll tell you 2 or 3 items. Like on this last house, he informed me of a water leak in the attic that I didn't know about, and that the roof, although I thought it was in pretty decent shape and I probably had another 5 or 10 years left, turns out it's completely shot and needs to be replaced immediately. You generally find a lot of good information that you didn't know before. They can also be very instrumental in taking that back to the seller for a big item like the roof to say, hey, I didn't realize it had this. Can you help me out on this? Or can you fix this? Or can you give me an allowance for that? So it's a great negotiating tool as well. So what is your house going to rent for that you currently live in, or the next house you buy? So Zillow will give you a rent estimate, or Zestimate they call them. In my market, I tend to rent my houses for more than what Zillow suggests. I think that might be because I take better care of mine. There's also a 1% rule that means 1% times the value of your property is roughly what you should get in rent. So the average for my portfolio is just under 1%, or 0.85%. Multiply that times the value of your house, and that's probably a realistic number that you can get for your house, at least in my market. Zillow is also great at showing you what house is sold for in that subdivision. If you zoom in on a house for sale, or a house not for sale for that matter, you can see what each house sold for when it sold. And I would really only focus on recent sales, such as the last 6 months is what appraisers commonly use, or maybe within the last year if there's not anything sooner. And so you can focus on those subdivisions and kind of see what they've sold for. You can also see what they're listed at. Zillow is a fantastic tool, and Google Maps. So you can get started in real estate today by renting out your current house, buying another house, or buying your first house to live in with the intent of renting it out. At today's record low interest rates, I think you could generally, at least in my market, buy about any house or most houses at around market value. And if you can qualify for a 30-year fixed mortgage, you can more than likely cash flow most houses in my market today. The key to that model is to getting a home loan on them instead of an investment loan, which will make your monthly payments very small. And you'll be able to ride the inflation wave and make all of the appreciation over the next several years, in addition to having the mortgage paid down, as well as enjoy the monthly cash flow. And you'll also get a lot of tax benefits. I'll cover those 4 streams of income in another video. So basically, you just repeat this same process to get your first 10 properties. I recommend you buy as many properties as you can as quickly as you can. I bought 4 last year. I've got 2 under contract. I'm working on another deal currently. I'll also be making videos on everything you need to know to do this yourself, from landlording, processes and procedures, and automating everything, QuickBooks, how to use Zillow, websites, things like that. If you get stuck, I also do some one-on-one coaching, and I'm working on some online courses. Don't forget to check out the show notes below, where I've got a link to those couple of books that I mentioned. In the comments below, let me know if you have any questions. Also, let me know how you're going to get started, or how you got started with your first deal. Let me know what other topics you'd like me to cover in future videos, and I'll try to respond to every comment. Lily is back, and she wanted me just to remind everyone that she's giving a pair of Apple AirPod Pros to one of our first 1,000 subscribers, and that you get an extra entry to win every time you hit the like, make a comment, share, hit the notification bell, and subscribe to our channel. Thank you for your support, and we'll see you next time. Say goodbye, Lily.